Hey everyone, David Gold, the Core Real Estate Group. Hey, first of all, I want to start off by wishing you a happy 2026. I hope this year brings you plenty of health and prosperity. And why don't you make it a resolution to check out more of my videos? Go ahead and like and subscribe below so you'll know every time we release information on real estate. With 2025 officially behind us, I figured this would be a good time to stop and take a look at where we are in the real estate market, mostly focusing on the Los Angeles real estate market. But before we do, let's look at what's going on with interest rates. And, we're looking here at a more historical chart of where rates were. Of course, back in the 80s and 70s, rates were crazy, double-digit rates. And then we had a recession in the 90s, and rates dropped down, on median, I'd say somewhere in this kind of, 7% range. And then we had another recession in the early 2000s, and rates pretty much dropped, somewhere in the high fives, low sixes. And this is where we were leading into the Great Recession in 2008. And then in 2008, as Fed policy started to cut rates to try to stimulate the market, rates dropped into the fours and the threes, and we were in the threes and fours for quite a while. And then COVID hit, our fastest recession, and that's when rates got super low into the 2% range. And then, of course, they've been adjusting ever since. To kind of look at where we are this year, you kind of have to just look at it on a year perspective. And you can see that we have kind of been in this low 6% range for about the last 5 or 6 months of the year. Rates are stabilizing, trending a little bit lower. And, our hope is that these rates will kind of get into the high fives, which again is pretty much where we were in the early 2000s, with that huge run up in real estate prices going into 2005 and 2006. And we're looking at looking at sales. You can see that in all of these charts, the blue information is Los Angeles County. The red is Orange County. And we finished in Los Angeles County with 46,000, just over 46,000 transactions that were conducted in the year, just a little bit under 21,000 in Orange County. LA County, we're about 0.1% over where we were the year before. Orange County was, basically down about, 0.75%. But when you look at where we have been historically, we are still well below where we have been from an actual number of transactional sales. So pretty much ever since rates started rising right around in January of really kind of in late October 2022, high interest rates have just killed the number of transactions we've been having. Even during the Great Recession of 2008 and 2009, we were still averaging in LA County around 6 to almost, 6,500, 7,000 transactions. But man, volume has just really dropped with this latest rise in interest rates. When we look at pending sales, this is really interesting. We just have been dropping like a rock since October, which is ironic because really rates have kind of stabilized, towards the back half of the year. But pending sales in both LA County and Orange County have really taken a sharp decline. The last time there was this sharp of decline was really when you go back and you look at where we were in COVID. In April of 2020, COVID hit in March of 2020, and that's when we had a steep drop in transactional volume. What's that attributed to? I think a lot of people, first of all, were just kind of waiting to see where rates would go, hoping they were going to go lower, and seeing what would happen with the economy. And now that things have seemed to stabilize, I think we're going to start to see some transactional volume improvement going into 2026. But continue to look, we're going to look at months supply. And when you look at this is a 5-year level. You can see that over the summer of this year, we got about as high as we've been in the last 5 years with the number of homes available for sale. But when you go back and look at long-term trends, it's nowhere near where we were, coming out of the recession, and certainly the Great Recession that started in, 2007, where we had over a year's supply of homes, really in Los Angeles County and Orange County. So we're higher, but, things have kind of dropped going into the end of this year. And that's pretty normal that, people will tend to list at the beginning of the year and then buyers will kind of move in the spring. And then over the end of the year, there aren't as many people that bring their houses out on the market, in the fall, in the winter time. Yet there are still buyers out there that are buying and, they'll generally will start to eat away at some of those available homes. And then the last thing we're going to look at is actual sales prices. And, really since, right around the end of 2022, prices have been pretty stable. We had this big run up in during COVID, 2020 to 2022. But since then, if you look at where we were in August of 2023 to where we finished in December of 2025, there's been a little bit of an increase, but really no more than just normal inflation appreciation. And, looking forward into 2026, if we are looking at interest rates that are probably falling and maybe even falling down into the high 5%, wages have been rising, but real estate prices have been fairly stable and pretty steady. It's improving affordability. And, some of the projections for next year look at about maybe having another 500,000 buyers coming into the market. A lot of them are first-time home buyers. And then also a lot of sellers that just can't hang on any longer. They've been holding on to their property because of their low interest rate, but that property no longer works for them and they have to make a move. And once rates get into the 5, the spread of the rate in which they have and what rates are in that current market condition could become close enough to where people will start to transact. So if you want to learn more about 2026, I have a great article just published by NAR that kind of talks about multiple projections of where rates are going, where inventory is going, where new construction is going. Or you can call us. We love talking about this stuff. Please think of us as your local real estate economist. And if you want to know how this data affects your situation, we would love to have that conversation with you. So we hope that we can communicate with you in 2026. We'd love to chat. Real estate's our favorite subject. Give us a call. But either way, have a great 2026. I hope this has been helpful and I hope to talk to you soon.